My name is Ashley Markowski, and I work with Macrolease as a business development officer. People often ask me, what is Macrolease? Macrolease is a bank owned finance company that specializes in equipment financing. We mostly finance fitness equipment, such as strength equipment. We finance cardio equipment. We finance any equipment that can be located or placed in a fitness or wellness facility. I started my career 10 years ago. Back in 2014, I attended a franchise expo and I came across a brand that some of you may have heard of called Orange Theory Fitness. At the time, that brand had 40 locations. When I met them, I was able to help them scale to over 1,000 locations. At the time, Macrolease, we were mostly working with big box gyms at a low price point. This was one of the first brands that we met that had a higher price point, but given their tech savviness and everything where they were going, we partnered with them and helped them grow by providing tons of financing options, scalability, and ways that they can really grow their empire. The way that Macrolease and really me, this was the first relationship being so early in my career that I developed. It was about listening to the borrower. It was about understanding that every person has a different journey, every person has a different goal. And to really, as a lender, understand your goal and your business plan early on in the relationship is going to be paramount to success. We at Macrolease are able to customize and develop specific tailored solutions for each individual borrower and franchisee and gym owner. And that really is what has allowed us to grow with the industry. But more importantly, it's about the relationship and it's about the fact that we listen to you and we're your partner.
So, what is equipment financing?
Equipment financing can mean different things to different people, but to give you a really roundabout idea, it is a finance solution to allow a gym owner to conserve their capital by using leasing or financing, almost like you would if you think about a car. Why am I going to put down $20,000 or $30,000 on a vehicle when I can finance it at a fixed payment and save my capital for another opportunity down the line? Equipment financing has so many different options. So in the industry, there are options for you to just lease your equipment. And why would I lease my equipment? I want to lease my equipment because I can upgrade and refresh my treadmills or my cardio equipment at my facility on a 3 or a 4 or a 5 year basis so that I'm not only conserving my capital. Instead of laying out a tremendous amount of money up front, I can pay smaller payments over a period of time and then have the ability to refresh my equipment after the end of the lease or the loan so that I'm also providing the latest and greatest equipment to my customers.
So, what's the difference between equipment financing and every other type of financing?
So the difference between equipment financing and any other loan that you might think of, a line of credit or a different option that's available at, let's say, a traditional bank, equipment financing is specific to equipment, which means that lenders such as Macrolease lend against the equipment and they use that as collateral. And the reason that that's so important is that you, as a gym owner or an individual, you're not tying up your bank lines of credit. So if you go to a traditional bank, one of a large bank that is down the street from where you live, you're going to walk in there and that institution is not going to understand or value the fitness equipment the same way that we would at Macrolease. They're going to ask you to tie up a line of credit. So by using equipment financing, we're leveraging that asset and we're lending against it so that you don't have to tie up your lines of credit.
Like, what's the advantage of equipment financing over a line of credit or a standard bank loan or my credit card?
The competitive advantage to using equipment financing versus using a line of credit or borrowing against a marketable security or a stock? Some people have stock portfolios. If an opportunity arises, which oftentimes they do, maybe you want to acquire a location or a new store you want to open, it is paramount to have cash and to conserve your capital. So by keeping your lines of credit open and using equipment financing to scale your business, maybe there's an opportunity that's going to come down the pike that you weren't expecting. And now your line of credit is open and available for you to pounce on that opportunity. The benefits of using equipment financing with an equipment lender such as Macrolease versus a traditional bank loan also is the fact that we fully understand the value of the equipment, the asset. That's our bread and butter. So we only finance in the fitness and the wellness industry, which means that we have a firm understanding of the value of the asset. The relationships with the equipment manufacturers are also as important to us as our relationships with our end users and our gym owners. The fact that we have relationships with many fitness equipment manufacturers nationwide allows us the ability to get premium pricing, specialized programs, and also clear communication and expectation to our borrowers and also to our manufacturers as well, that we've spent years developing relationships with. We have tons of relationships with the fitness equipment manufacturers. And with that being said, it allows us also to form relationships that are specific to Macrolease and these equipment manufacturers that you're not going to be able to take advantage of or experience if you use traditional bank financing.
How are your rates compared to traditional financing?
Interest rates are a big topic right now. I'm sure, as everyone knows, they're at an all-time high. Our rates are extremely competitive in this space. Another really important thing is they are fixed interest rates, which is very important because clients that I have that took a loan or a lease out 5 years ago are in a fixed interest rate, despite the volatility that we've been seeing in the market.
Since the rates are at an all-time high, don't I want a variable rate now in case the rates drop back down?
That's also a really good point. Is now the time to be in a variable or an adjustable interest rate? I will still say no to that because it doesn't seem like rates are cooling down anytime soon. In fact, there is a chance that they can continue to rise. And what's unpredictable and scary about an adjustable interest rate is the fact that you don't have a predictable debt service. You have projections that are not going to be fixed. At least with a fixed rate, you know what to expect and you know what to service. And another thing I would like to bring up is at Macrolease specifically, we recognize that in the next couple of years, rates are going to cool down and climb downward. In the event that we do have a higher interest rate that we're booking on deals today or this year, in a couple of years, we're willing to refinance our own debt with no closing costs, no prepayment penalties, and honor the lower pricing at that time. So we're really in this for the relationship and to be able to set up our borrowers for success. But my rule of thumb has always been to avoid any adjustable rates or variable rates.
What are the disadvantages of equipment financing versus other types of financing?
What are the disadvantages? I guess to be completely transparent, what I've seen in my career and my 10-year experience is sometimes folks will get over leveraged or they will enter into equipment financing contracts that don't allow them to prepay, or there are certain caveats that are tied to the loans in the contract. So my biggest piece of advice is to make sure that before you sign any contracts with any lender, to make sure that you get everything in writing through a term sheet or some sort of document that outlines the prepayment penalties, if any, the ability to prepay, and anything that might prohibit somebody from selling their business or maybe refinancing with another lender.
Who's your ideal client
My ideal client, and I'm sure other banks would agree with this, I love to work with people that don't need me or Macrolease. And the reason behind that is equipment financing should be used as a strategic way to grow your business. It shouldn't be used as a lifeline to help you afford to open your gym. So if you have the capital to fund the majority of the project, or maybe you have the capital to fund the entire project, but you want to be strategic, you will use equipment financing to conserve your capital and potentially use that capital that you would have spent on the equipment to open up another location or to maybe upgrade your facility in a couple of years. So all of that is why equipment financing is truly essential to borrowers that are looking to scale. Scalability is a really important topic. Whether you have one location, 5 locations, or maybe you don't have any locations, but you know that you're looking to open multiple stores. Equipment financing is going to allow borrowers and clients the ability to conserve their capital. So if you have a $50,000 equipment package, instead of spending $50,000 out of your own money, what you're going to do is you're going to finance it at a fixed rate with a fixed payment. And you're going to take that $50,000 and you're going to invest it in another location, or you're going to have that money available so that if an opportunity arises where there's an acquisition or there's a sale of a store that's local to you, you'll have the capital and the means to be able to go after that. And that's why using financing is it's directly correlated to scalability. Using equipment financing is essential for scalability. It's allowing you to conserve your cash and hold on to that money that you would have spent on the equipment to possibly acquiring locations or for other growth opportunities that might arise.
So what's the application process?
The application process is very, very quick because our process is we want to provide a term sheet or a pre-approval upfront to our borrowers. So that way there's full transparency before we ask you to move forward with our proposal. So usually it takes about 3 business days from the time that the application is sent to us to provide you with a term sheet. For something very straightforward, such as, a refresh of, let's say, equipment at an existing location that's been in business for 3 or more years, that process can be as quick as 24 to 48 hours on getting an approval. The types of equipment that we look at and we finance is mostly cardio equipment, treadmills, rowers, strength equipment. We've been able to fortunately finance signage. We've been able to do audio visual equipment. So it's not just the fitness equipment within a space, but we do have the ability to cover some of the soft equipment or the soft costs, the lockers, flooring, lighting, fixtures, your front desk, all of that within the space is something that we will finance. Signage is definitely something that we can consider within our financing products. However, what I will say is signage can be a little difficult in the event that there was a default. We can't remove that equipment from the space as easily as we could a treadmill or a rower. Also, if you're moving location, sometimes clients will outgrow their current space, but we absolutely can include signage in the package.
Are you financing the purchase of equipment only, or do you also finance leasing equipment from some of the manufacturers?
We do. We offer, similar to a car, we offer financing solutions and we offer leasing solutions. So when you lease a piece of equipment, such as a treadmill, you might want to take advantage of a fair market value lease, which is similar to an operating lease for a vehicle. It's a 3-year term. At the end of the 3 years, there's a residual. You either have the option to purchase the equipment for the value that it is at that time, or you can oftentimes, with our relationships through the equipment manufacturers, get a trade-in value on new equipment by returning the old equipment and then financing and upgrading your cardio at that time. So that is more of a leasing modality, whereas financing is similar to it's purchasing. You're the owner of the equipment. We're providing the funds to the equipment manufacturer, and then you're paying that back over a period of time. We have two separate divisions here at Macrolease. We've got the direct side and we've got the indirect side. So the indirect is when one of our sales people will work directly with the equipment manufacturers. The direct side is when we work directly with the actual owner operator. And so it really is truly a split here at Macrolease. We have two separate divisions that handle both types of relationships. From the borrower's perspective, it behooves you, irregardless of direct or indirect, it's really important that the borrower and the owner operator has some relationship or communication with the lender. Because sometimes what will happen is the equipment manufacturers will have their sales reps and they'll be bidding out the deal to various lenders. And sometimes it's about the best rate. And instead, what you should be focusing on is what is the best customer experience? What is going to be the easiest access to capital through a lender? And I think having the direct rapport between the lender like Macrolease and you, the owner operator, is going to be beneficial because it's going to allow you to choose the best partner for your business. And having a third party or a middleman sometimes can, well, you've played the game telephone before. Macrolease not only is a preferred lender in the fitness and the wellness industry, we truly understand what it takes, the challenges, the positives of being an owner operator in this space. And I want to use this example because it's a real example. And as some of you may recall, a couple of years ago, there was a devastating pandemic that affected all of the states and fitness centers alike. During that time, being a lender with a portfolio that was comprised of 90% fitness, the first thing that we did was call on all of our borrowers to tell them that we don't need any explanation. We are automatically going to give you 3 months of deferred payments. And after that 3-month period, we're going to help you come up with a payment solution. Some states were affected a lot worse than others, and those states we created custom programs for. And the reason why I'm bringing this up is right now is not the time to be shopping interest rates. Right now is the time to be working with a real partner that's going to be there for you during the good times and the bad times. And that is exactly what Macrolease provides. We truly, truly care about the industry. We are heavily invested in it. And we're not going to finance a fast food chain, but we absolutely will finance a fitness or a wellness center. Macrolease has been in business since 1969. And when we started off, we were financing fitness equipment for YMCAs and for gyms. And we've always maintained this passion for helping the fitness industry because not only does it feel good, but it also feels great to be able to provide financing to owner operators who in turn are saving lives and helping people become the healthiest, best version of themselves. So at Macrolease, we truly are invested in the industry, but we're invested in you helping your members because ultimately it comes full circle. I've got clients that over the years have become like family to me. And it stems back to the relationship aspect, but everybody here at Macrolease provides a very boutique and customized feel. Often what most of you owner operators are doing for your own members, we're doing the same thing for you. Best parts about working at Macrolease and Macrolease being invested in this industry is that we have been able to develop really, really close relationships with our clients. I get asked this question often, why not just go into Chase or Bank of America, a major institution that I've heard of? Why Macrolease? Some of you may be working 9-to-5 jobs and running businesses and taking care of households. Listen, I'm a mom, I have 2 children. I get it to a degree. I am always available. Somebody at Macrolease is always available. We're not the traditional 9 to 5 banker. Our phones are on. You can text, you can FaceTime us. We're reachable. I've had many clients in the middle of the night have an idea and call me or ask for advice on something that Chase or Bank of America or some of the Fortune 500 companies just are not equipped to do. You can go there, you can open up a checking account. They'll be great at that. You come to Macrolease if you want to finance your fitness equipment. For anyone who's interested or wants to have a discussion to ask any additional questions that I might not have covered, I strongly suggest that you click the Learn More button on the Macrolease page. It'll direct you to either myself or somebody here that will be willing and excited to assist you.